This is Rod Kusin, Spoon for Risk. A recap for November the 10th, 2016. Market sold off rapidly this morning, and we were looking for the support area on our composite profiles. As the market dropped down through the 53.75 level on the Spoos, it continued to drop, and we really didn't see anything until we come to 38. Now on the YM, there was absolutely nothing because there's no profile up that high. Same with the Dow. But on the other hand, the INX was really clear. We had a support level at 2151, and that is exactly where the market came down to. 2151, that's where it bounced. That's where we found support, and off we went. So let's just take a look at the drop. Now, before the drop, let's talk honestly about the difficulty we had on the way up. Now, the ES showed resistance at 2177.75 and 79.75, and that's based upon composite market profile. We'll show you the legitimacy of these numbers, running from the 27th of June through the 9th of November, just yesterday. So those were the numbers. Now, on the way up, we started getting some sell signals. And we got our first one over here. And we believed it, and we got stopped out. And it didn't take long, because the very next, within seconds, we had a new high bar on the premium, all suggesting that this market was continuing up. So we had to get out of that trade. Nothing materialized. Then we moved up to 77, and we got another sell signal at 77. And right at 844.40, the lows of the premium moved up. Now, the premium moved up from the lows. That's a very strong indication that the market is continuing to move up. So we had time to react to that. Then we come up to 78, and we get another sell signal. And we took it. And then the market moved down. We got a lower low on the premium, which to all, for all practical purposes, suggested that this market is moving down. And yet the market continued to move up just a little bit higher to 78.50, and then we get another sell signal. So yeah, we got a lot of sell signals on the way up here. Fortunately, had time to react to at least one of them. Now, that of course was right up there with the profile numbers, and we should have paid a little bit more attention to the profile numbers. But in all honesty, we've got to look at the premium, because profile numbers are just that. They don't always work. And in this case, the premium was just premature in our estimation. Now, the move down was more significant. You had to be looking at these numbers, because on the way down, we get a buy signal here as we moved to the low of 66. Now, that's a legitimate buy signal. I mean, my goodness, that's the divergence on that was substantial. And this did okay. I mean, it made a little money, but the market then fooled us. Or pardon me, the premium fooled us. Okay, premium fooled us, because we started moving up, looking at this high. All right. Now that's a big divergence. all right? And we're way up there. And then we move up to this high, and we're a little, and we're higher. So that all suggests that this market is moving up. Now it moved down a little bit more, and we became slightly divergent, not enough to stop us out, and then it moved up again. So both of these are suggesting that this market is moving up. Unfortunately, it tanked. It took us out. That's the way it goes. We get another buy signal down here at 60.75. That too worked a bit. And yet, the market continued to move down. All right. Now, we didn't get stopped out on this, but when we came up to this pivot level, we're at a lower high on the premium, which is pretty much indicative that this market is still moving down. Then we come to this pivot. Okay, again, get a higher read on the premium, and we're moving up again. So we go long. Nevertheless, the move on the read on the premium at the high was a higher high. That's confirming that this market is going up. But as it turns out, all this is doing is just flagging us to the eventual move up that takes place later on. We're not really getting a clear divergent pattern here. Instead, we're seeing more evidence that this market should be moving up because the premium is telling us just that. Unfortunately, the market begins to tank. And when we get this lower read on the premium at 426, and you know, we're really watching the premium here. We're watching it very, very carefully. But this this step down from the SH there at 408, and now we see it move down a little bit more. That's not good. That's not good. So we just tightened our stop to break even, and that's all we got out of this because it was premature. And then we get this big drop in premium, and that's pretty much indicative that this market is going to continue to move down because now we're lower than we were over here, and that's pretty easy to tell. We just extend this out to the right, and you can see we're below that level. So now it's pretty obvious that this market is going to continue to move down. So it's really a question of, well, just where's it going to pivot? And about that time, we started looking at the other levels, and we could see 51 on the radar on the INX, and we finally got it right, unfortunately. It took several attempts to get it right. So as we came down to 51, Spoos are down at 47.75. Nothing really outstanding there in terms of support levels, at least not on our radar. And we could see that we're getting finally a divergence here, but we're not yet at that level. And then we get a big divergence here. There's your big divergence. And now the market finally begins to move up. Now, along the way, you get a lower read here, another lower read there. Now the market is telling us, or the premium is telling us, you know, we're not quite ready for this. And we come down through, then we test that level here with a significant divergence on the premium. Comes up, and we're divergent again right there, and we get a big drop at the high. We're at a lower level here, so now we know we're still just a little bit too early on this, because this low suggested, yeah, we've got to test not only that price, but we've got to get a bigger divergence on the premium. And we finally test that price right here, okay? And we come down lower, and at that point, we can zero in here correctly. There we go. All right, now we've got kind of even Steven on the premium. It was previously at 446. It's still at 446, and we're at a lower low. So that is effectively a divergence. And finally, we really begin to get the rally there. So we're watching it all along the way. We're making some money. We made good money on the initial drop, and then we just had some difficulty. It's just that's the way it goes. I mean, we're reading this because it is extremely accurate, but by the same token, you know, we just didn't see the right support level showing up anywhere until we got much later. And right in here, that's where we realized where the INX was headed. And then it became more clear what we needed to wait for. But overall, we did well. Now, could we have done better? Certainly we could have, but here's the problem, all right? Here's the problem. If we set the read too quickly, if we set this too quickly, then there's a lot of noise there. A lot of noise there. And even so, on a 20-second chart, all right, it's still difficult. So it happens, but overall, you know, the market was doing, or the system was doing really quite well. Now, a couple of very nice pointers here. On this high, you knew, because that's a good clear naked bar situation. All right, so it was very obvious that we needed to be going long, because this price way up here needed to be tested, and as you can see, of course, it was. Now, as we get up there, we get another good move up on the premium that pushes us higher, and then as we come to this point, we're pushing higher again on the premium, but we get divergent right there at the top. Now, it doesn't necessarily change the overall market direction, but nevertheless, the market began to drop, to find support right around here in this point of control. As that happened, however, we got a naked bar down here, and that was a little troublesome because it's pretty low. It's pretty low. But now, as we consult another chart where we've eliminated some of the noise in the premium, and we're just testing this once a minute, we get a much better picture here, because we're clearly moving up in the premium here and here. And this little low then doesn't become such a big deal because of the fact that it was preceded by this bigger move down. All right, that bigger move down really helps us to see that that is actually more of a divergent pattern. Now, if this had been below, say, the 446 level over here, that might have been a little more of a concern, as it is here. Okay. If this bar looked like that, then this low would be a low that needed to be tested. And as you can see, this is tested over here, and then we get a much bigger divergence. Now, as this market moves up, if this market is, and really, we've got to get to Make sure we're reading this right. Okay, that's actually a divergent pattern right there. Because of the preceding drops here, it doesn't really change the overall picture. But when you get these big bars up and then a drop at the high, there's enough divergence there to send this thing south, and that's what happens here. These drops here preceded by or followed by this divergent move up is just the opposite of what it is over here. So we're up there moving back. This has to be tested. It is. You see the drop right there as we move right up into the upper value area. So now even a bigger drop, and when that is tested, and then down we come to a divergence right there, and then back up we go. Now let's look for a couple of other quick instances of where the premium is really forecasting. We start moving again higher. We get this divergence in here. All right. Then we get a lower read on the premium here. So we're still moving south. And then even a lower read here. And that's predictive. We managed to get back into a divergence here, and we move up higher, only to find ourselves very divergent at the top. So overall, we're moving higher, little divergence, resume the move higher, big divergence, big move up, big divergence here, and down we go. What needs to be tested is this low, 65.25. That has to be tested. Okay, that's what the premium is telling us. So as we moved up, eventually later on in the day, it comes back. And you knew that way over here. So once you became divergent at this top, you're just looking for opportunities to short this thing, if you weren't already. And another nice opportunity to short it here. Here on this move up, now that, you're going to have to wait till tomorrow, because that low was not tested. And yet it's very clear that that's a naked bar. Okay, that's really one of the highest bars that there were all day long. So this market is coming back and expected tomorrow, in all likelihood, back to 73.25. There's your premium at 314, forecasting that this market will move back up. All right, then we get, let's see here, where are we at? Okay. All right, so we're testing this level here. We're still moving down, but that big move up, shoots us up a little bit higher. This becomes somewhat predictive that that'll get tested. It is, and is divergent right in here. So you had an opportunity to make a little money on a long trade, and then you knew exactly where to short it, depending on how the market, how the premium behaved at that moment. And look at how well this predicts it. 72 is the high. 72.25 here, and a much lower read on the premium. That's the kind of divergence that you short. Beautiful. Nicely done. And there's the end of the day. So, very good accuracy, through the course of the entire day, and just a little bit more of a challenge this morning. But the afternoon was easily traded with this kind of data. So you need to get this indicator, and you got to learn how to read it. It is the best thing out there, bar none. There's just no better indicator out there. because it's spot on accurate. It's beautiful. I'm Rod Kusin, Spoon Man for Risk.